Good morning. Why more CRE deals will be won by capital and not by price alone? And for the most part of the last real estate cycle, price dominated negotiations, and buyers stretched and sellers pushed, and financing was an afterthought until it wasn't. And in today's commercial real estate market, it has shifted. And while liquidity is returning, certainty of execution now matters more than the headline number. And across Houston and other major markets, sellers are increasingly choosing buyers with strong capital positions over those offering the highest price. And I don't think this is a temporary anomaly, it's a structural reset. Now, the seller's new priority, certainty, not optimism. And after 2 years of volatility and failed escrow contracts and retrades with their lenders, sellers are exhausted. And they've learned, often the hard way, that a high price backed by weak capital is often a liability in a purchase contract. So sellers are now asking different questions. Is the buyer fully capitalized? Is financing already approved or just in progress? Can this buyer close on time without extensions? And in competitive CRE deals, certainty has become a form of currency. And this next segment is capital strength is the new competitive advantage. And so sophisticated buyers understand that capital wins deals long before price does. And now we're seeing sellers who are prioritizing hard money or institutional equity that's already been committed to a deal, clean balance sheets and lower leverage, also track records of closing similar assets. And I think this one's not a surprise, but shorter due diligence and limited contingencies often help win contracts. But in many Houston transactions, sellers are accepting lower prices in exchange for higher confidence, especially in industrial, value-add retail, medical office, and development land. Liquidity is returning, but it's selective. Yes, capital is coming back, and private equity, family offices, and higher net worth investors are re entering the market. However, lenders remain disciplined. So, debt capital is available, but it's going to favor some of these items. So, they're looking for experienced sponsors, conservative leverage, and clear business plans. And this creates a bifurcated market where well-capitalized buyers can accelerate while prepared buyers are stalling, and why developers are leaning into capital over price. For developers and experienced investors, the lesson is clear. Winning deals today means removing friction. And that friction can include bringing equity early, securing lending relationships before going under contract, which is often a good idea, I might add, but structuring offers that reduce the seller's risk. And in tightening execution windows, capital velocity matters more than aggressive underwriting. So what does this mean for investors and sellers here in Houston? Well, Houston's CRE market, particularly in Katy, Fulshire, and West Houston, and also along major logistics corridors, rewards preparedness. And if you're a buyer, your edge is capital readiness. And if you're a seller, the safest exit is a buyer who can actually close. Price gets attention, but capital gets deals done. And here's the final thought for the day. The next cycle will not reward optimism, it will reward preparation. And in today's CRE market, capital doesn't just support the deal, it wins it. That, my friends, is it for the day. Please visit my website, HoustonRealEstateBrokerage.com, to get a hold of me and love to chat more. Take care.